Welcome to Market Movers. I'm Jim Iuorio, and today we're discussing the ongoing Brexit negotiations and their potential ramifications. We're going to be looking at using CME Gold Futures, GC, as a way to hedge potential risk or create exposure to this event. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Okay, so the negotiations, if they begin to stall, what are we going to see in currency markets? What are we going to see in gold markets?
So you're saying what's happened so far is not stalling? I mean, my goodness, man, what are we, a year plus removed from this? I'll tell you what's interesting is, I think either way at this point, more stalling is going to finally bring some volatility back into the currencies because things have kind of been meandering along for so long. Is
your implication here in your answer to that question that the one thing Europe's been really good at and shown us for a long, long time is they tend to kick cans down the road? Do you think they're going to kick it down the road potentially forever?
I think they're going to punt this one down the field, and that's what they like to do, is your point. So that's been the pattern so far. Yeah. Why is it going to change by now?
Nobody wants a hard Brexit. Nobody. It's not in anyone's best interest. I can't imagine that happening. Now, before we dive into our trade discussions, I'd like to point out that as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to either manage risk or create additional trade opportunities, not as trade recommendations or advice. Prices and movements are going to change. The market now we're pricing is the DEES gold contracts trading at about $12.82. Scott.
So, watching the GC in response to the misgivings, let's say, in the Brexit situation has been really fun in the last few weeks. And so the GC has provided, I think, a lot of opportunity with respect to how you want to expose yourself, either long or short, calls or puts. And specifically today, Jim, I'm looking at the week 2 November 1300 1325 call spread for 4.2 ticks. It expires November 10th, has the underlying under at 1282, as you mentioned. It risks 420 to make a potential 2080, which seems incredibly cheap, considering that if anything breaks down or continues to meander, let's say, word of the day, in these negotiations, that to me should put at least a little bit of a bin under GC.
I like it. I like it a lot because of the risk reward. 1300 doesn't seem that far away to me. I wonder if it's so cheap because the market thinks that's a psychological line in the sand. I don't know, because we've been through it before. But I'm looking at something similar, but I'm going to have a little bit of a twist to it as well. I'm looking at selling the week 1 November 1260, 1250 put spread, and you sell that and taking a credit and using that to finance buying the November week 2 1295, 1310 call spread. Now you can buy the spread for 2 ticks, selling the one and buying the other. Now the one expires on November 3rd, the put spread. So I would advocate covering that before you're assigned anything if the market goes down, and using that to finance having the week longer in gold. A week longer in the other call spread. Thoughts?
Well, you're going a little cheap on me because you're selling something to buy something, which is a similar expression as me, but I think that's good.
Right.
Because if you're getting favorable price action in that selling of the put spread, that's fine.
No, but mine could lose more when it goes down. Remember, the risk's 12 ticks if it goes down through that put spread. But if you make it all the way on the upside, you can make 13 ticks.
And a great example here, and similar to my expression of, these are trades that I believe you likely need to manage a bit. If you get them going in your particular direction, one way or the other, you don't always have to have these fill out, sports fans. I mean, feel free to take some skin off the table, if you will, if for some reason they move one direction or another that's favorable in your direction.
Last question. We keep hearing that announcements are going to be coming out. They're imminent. They're coming out in the next few days. But days keep going on. Do you think we're going to hear some in the next week that's interesting?
Very little.
Very little. Me too. Thanks for joining us on Market Movers. I'm Jim Iuorio, where we're helping to make you a better trader.